All right. Good morning, everybody. Second day in our hurry up and wait situation with a nice grind up yesterday. Markets are digesting that move now. Getting these little whispers out of Canada. Uh, a high-ranking official underneath Trudeau kind of got a little butthurt and left a letter of resignation that they're still piecing together, but could see some fireworks out of Canada today, eh? It might be a little fun. It might move stocks a little bit depending on what we see in that direction. Small caps down 0.5%. Hong Kong up 1/4. Really everything digesting through that. UK down the most. It's still eyes on FOMC. We get some retail, some industrial production. Keep your eye on that time frame. It's one of those quarter hour instead of half hour and full hour events. And government's lazy. Most of the events are on the half hour or the new hour, but there is a reason why we watch those 15-minute candles. Otherwise, the expectation is that we hold the line and we wait on FOMC. NVIDIA has been weak and fading. The fact that the markets are able to hold up at all kind of really talks to the disconnect that we have with NVIDIA. But the other Mag 7, if you look at consumer discretionary, it almost looks like a rocket ship. So if we go to FX Street, you can see the high impact from retail sales. Just got to make it through the day. I don't think there's any surprises here. It was odd yesterday too with that grind up that we weren't even getting the options flows either. Yeah, nothing new in there. All right, so today's ADR, both of them will put us outside of the RTH of yesterday. So if we're looking for an inside day breakout, focus on the RTH first, right? The regular trading hours of yesterday. We would have to get outside of that range if we're going to get to the ADRs. Then to the downside, we're much more likely to hit that lower ADR because we're already inside day breakout of the RTH. So we could hit that. And if we hit it early enough in the day, we could hit the other side by the end of the day. It's just a function of markets, right? If we're not really expecting to go anywhere, then holding the line sideways kind of makes sense. Now, when we go out onto the hourly, we can see the decline, even just using something like the regression line. Just start at one end, drag it over to the other. You can see the slope, lower highs, equal lows. So we're chopping about. We've got a complex topping pattern, holding the line, waiting on data. Let's see if we can tag this ADR first, which is the base case argument. Then if we continue the weakness, get completely outside of Monday's range, then focus on Friday's low, and then this lower ADR. There's a cog line at 6111. And underneath this yellow line, the full ADR, we've got the round number at 6100. Now, I've seen a number of people struggling yesterday. Depending on what broker you're using or what charting platform you have, your futures aren't lining up with what other people are posting. It's going to take a few days depending on what charting platform you have. The main thing is if you're trading in the futures, just look at the chart you have, right? If somebody's focused on a breakout on the ES, see if that lines up with yours. I wouldn't try to make your charts look like somebody else's. If they're bullish, use that bullish bias. If they're bearish, use that bearish bias. It's going to take at least a week. Starting to see this more and more with contract changes. You know, newer traders are coming in. They don't quite understand the contract changes or why TradingView doesn't look like Trade of 8, which doesn't look like Thinkorswim. But a lot of these brokers use a continuous contract, and the way it looks during the transition can be completely different depending on who you got. A constant theme, though, is to just look at the SPX, or if you don't have that index, look at the SPY. Go that route. That way you'll at least understand, you know, what is the index doing? Is it bullish? Is it bearish? It'll all be straightened up in about a week. It's not uncommon for traders to take the week off during contract changes. It's also not uncommon to see traders take the week off during FOMC. When you put those two together and it's a holiday, I mean, you know, maybe going to make some holiday cookies would, you know, be beneficial to your account. Just avoid the whole thing altogether. Read a book. We do have the market maker move still. I think we're going to see it all week. It's just a function of the new contract and seeing everybody roll out. Those out of the money options are being moved. That's what's causing the market maker move to show up. So it's not hedging. And even if they were hedging, we wouldn't be able to see it because of the general changes to the contract. So just ignore it during events like this. You can see if we measure the RTH of yesterday that we've dropped down to a 111. We didn't really get a bear trap that sprung us back up. And now we're back down here again. Not usually a good sign. Puts more weight on the idea that we're going to go ahead and hit this lower ADR first. Whether or not we can continue to fade from there, well, we'll see how it goes. Get through the 1, 2, 3, 6. That'll get us into the lower ADR. Then get outside of yesterday's low, Friday's low, 6111, and then 6100 step by step. Today's central pivot is higher than yesterday's, and price opened above it. Both of those things are bullish. The channel's a little narrower today than yesterday, but not by very much. A wide channel implies that even if we do break out, it won't stick. Now, I had somebody reach out to me yesterday and say, I thought we weren't supposed to break out, that it was supposed to be a sideways day. Well, if you look at Friday, And you look at what we did, we ran up, we broke outside of Friday's range, and then we came right back in again. We didn't break out and stick. We broke out and came back in. The breakout didn't hold. So I'd say it was right on schedule. It did exactly what we expected it to do. Hold the line, go sideways. We stayed inside of Friday's range. The expectation today is that we'll stay inside of yesterday's range or Friday's range or both. That would put us into an IX10 pattern, by the way. Now, when you're IX10 and it's inside of a really big candle, it's not very impressive, right? So we've been holding inside of that really big candle for a while. It's not impressive, right? If it's some big, massive shadow and then you're sitting inside the shadow, so what? But if we get a very narrow range and then we're holding inside of that for 2 or 3 days, then things start to get interesting because now we're in compression. So if we mark Friday, we've got yesterday where we barely peaked out of Friday's range and came back in again. And then we have today, it's a narrower IX10. It would have been better if we were, say hiding inside of that skinny little thing. But still, it's more narrow, it's more compressed. It's very likely that we come out of this topping pattern with a vengeance. The question is, what direction? The candles aren't going to give us the answer, right? There's no amount of technical analysis in the world that's going to tell us which direction we're going to come out of this thing. Because the direction is going to be dictated by the data we get from Powell, how the markets accept what Powell has to say, and what the numbers are in the FOMC announcement. It's not even this announcement that the market seems to be focused on, it's the forward guidance that the market may provide at this announcement. I wouldn't get my hopes up on that too much either, because they quit telegraphing, right? Because we front run them when they telegraph, and sometimes they like that. They use it to their advantage. And so they tell us in advance what we're going to do and what they're going to do so we can price it in. They stopped doing that so that we would stop pricing it in. So, I wouldn't expect too much out of them. Probably some language like we're just going to get our cut here and lean on data to see what we're going to do next, right? Data dependent, blah, blah, blah. With yesterday's advance, the pivot ranges very likely are wider today. So it may be a little harder to reach the edge. Nah, not by much, huh? Seems to be as compressed as yesterday. So getting to S1 or R1 shouldn't be a problem. Looks like you can get to R1 barely breaking outside of Friday's high, Monday's high, 61.68. To the downside, you can get to S1 pretty easy. After that, 61.03. This lower S line, it's really close to a full ADR. So if we had the ADR lines back on, they'd almost be overlapping. Nice to have confluence, yeah? We're underneath the point of control, and when we ran up to tag it, it held as resistance. It's very likely going to continue to resist us if we try to run up and get through it again. That's the level we have to get through if we're going to reclaim 6150 and then back to the point of control. It's worth watching this week if we start to develop a point of control down in this lower level. So we want to see if this point of control gets shifted down to this 61.41 or even lower 61.32 cog line. That's where I would expect it to show up this week. 61.32 cog line is the low that we're dealing with right now. We want to see if this point of control gets brought down to us. We can hold it a bit like support, use it as a structure to build off of to continue to run higher. Otherwise, if we break 32 cog, then we'll just work our way down from there. We got a bit of an air pocket to 60.91. So, you know, if we start breaking these lows Friday and even Tuesday of last week, right? Just wrap it all up and say last week's low. If we break last week's low and 61.11 cog line, get through the round number 6100, you're at 60.92 pretty fast. There's really not a lot of negativity out there that would make it this ugly that fast. So it would have to be some sort of news, right? Something shock and awe, wasn't expected. Something, say, like coming out of Canada with this resignation. Seems like somebody might be airing some dirty laundry. Who knows what could come out of it, right? There's certainly a lot of bricks in the wall of worry. Otherwise, we're at the put wall. Call wall is kind of defining Wednesday's high last week. It's still holding as a significant resistance. We're back to the 10. Really don't want to look for the 20 to provide any sort of help or support. And we have a voodoo line at 61.20. Unfortunately, the volumes aren't going to really help us out either, since these volumes are going to be reading the roll and contract changes. So it's not going to be very helpful. That ADR just keeps getting smaller and smaller, more and more compressed. 10-day, 30-minute volume profile, point of control still holding overhead. Shifting this down to 60.32 makes sense, especially with us holding at this level. They didn't pin it at 61.50. In fact, we can kind of see the, you know, the shallowness of that level. So 32 makes more sense. It would get this out of our way, remove an obstacle that's in our path. And we're building it out on the TPO. Looks like the TPO is already ready to shift down to that level. So I wouldn't be surprised if we come in tomorrow and at least the TPO's point of control is already shifted down to this point, and or our own point of control shifted down to this point. 60.32. Looks like we got our first VPOC of the new contract. $61.54. That'll be a level to fight through if we do get a breakout above our own Globex high. Otherwise, it's worth noting that we've got a bit of a classic lowercase b this morning on the profile. And we did get a bit of expansion if we're focused on the initial balance. Classic B, lowercase b like that, is often thought of as a bullish bias. Has to play out, but you know, there's another one. Now this one's really small and it's only in the Globex. So we could get another distribution if we only focus on this little profile. You know, we leg down, build a base, leg down again, build another base. That would put us down at Friday's lows. Still expecting to just hold the line, hold the range, wait on FOMC. Just continue to keep that in mind, that we're not supposed to go anywhere, because we're not supposed to go anywhere. We're at the 10-day moving average. We're just dancing back and forth here, chopping. It'll act like gravity or a magnet now that we're here. We need to build up enough exuberance to get away from it. And we're 2.5% above the 10-week. We're still really healthy. We're in a good spot. There's nothing wrong with this number here. On the higher time frames, everything still looks bullish. But with most of the market in this stretched exuberance, you know, overbought, too far from the mean, crowded trades, a lot of bricks in the wall of worry, FOMC pausing like we are to digest is a good thing. Since we don't have our typical weekly expected move, it's not going to be really helpful. We couldn't do it yesterday because it probably wasn't functioning then. But now on Tuesday, we can use Think Back. So, you know, if you hadn't got Friday's levels, this is a way that you can do it. Use Think Back, go back to Friday, the 13th, look at it at the end of the day. So if we were looking at it on the 13th, we would want 7 days out from that. It's 83 points higher and lower. If we take off the Z and put on the new one, '86. So 86, whichever contract you're using, higher and lower from Friday's close. Right now, the way I try to teach people to use Thinkorswim is you've got one menu on the top, another menu here, and then, you know, oftentimes there's even one more menu here. So you're only 2 menus down. Analyze, think back, put in the symbol that you want, choose your expiration. So 86 points. $62.11 cog line to the upside. and 60.39 to the downside. There's our week's high and low, our weekly expected move for the week. I'd say that's significantly wider than last week. All right, we're still not getting that capital rotation that we were talking about. It's likely we won't, at least until tomorrow. The bleeding continues. Like in healthcare here, we broke that key low. On utilities, we're holding structure, but you can see the red line that got us down there. Same thing with energy. We're at structure. It looks like we're beginning to break down. Certainly broke down here. We're at structure on that. Trying to hold it here on XLF. So we got a little attempt of a breakout on tech, and everything else is in consumer discretionary. So if we're looking for that capital rotation, this needs to flatten out and or fall so that some of these other names can start to rise up. We got staples on the 50. Could see some support there. Otherwise, I'd be looking for a dead cat bounce on a lot of these. Underneath the 200 now on building materials, that's certainly not healthy. Underneath the 200 on energy. You can look for it today. I don't think that you're going to see it, right? Holding the line would be the more obvious base case. They are getting stretched, though. I think even just a rebound, right? A bounce up into resistance like XLB into 90, hitting its head on the 200 from below. Same thing with energy back up to 90, hitting its head. Maybe utilities back up to the 50, right? We're just talking about a bounce into resistance. 146 in healthcare. Now, whether or not it can bounce into resistance, cut through it, slowly begin to work its way up, that would be more of a complete shift in markets, right? Getting away from this crowded trade and consumer discretionary. So the China group is down. Baba, Baidu, JD, all those guys. Emerging markets, which is basically China. Semiconductors, which continues to show NVIDIA's weakness. MCHI, which is China again. The MAG 7 is down. So this FNGU, it's basically the MAG 7's volume, up volume. There's also a down volume. It had been up more than 21% in the last 5 days, so it's down a little bit. It's just a little tell on the MAG 7 names. Gold miners continue to be weak. They're still down 4% over 5 days. Real estate, tech, which was up more than 3%. And SMH semiconductors, again, this one's not enough, right? We need it more than 0.5%, and it's not there. Bitcoin up again. It's up more than 9% in a 5-day period. The VIX is up. XXX Bull China is up, oddly enough. I wouldn't expect much out of that. So not much is up on the other side of things too. Just Bitcoin, really. Bitcoin, pot stocks, airlines. Solar's up this morning a little bit, but it's just an algo print at this point, not really getting much flow. So we're starting to see a little bit of staples. Be nice if that actually starts to come back around again as a part of that rotation that we were talking about. And expanded tech makes sense. If we're going to see bleeding in chips, then tech has been the other crowded trade, right? Software. So it's always that juggle between one or the other. All right, NVIDIA has been bleeding now for a few days. You kind of see that weakness. And the market is not looking like this, right? So we've got that disconnect going for us, which kind of implies even if this does find support and start to rally, it might not help us to the upside either. But it would be something I'd keep my eye on. The disconnect is nice. Otherwise, the whole market would be bleeding this way. But SMH is the representation of chips. And the rest of the chips aren't bleeding as badly as NVIDIA. Otherwise, this would look like NVIDIA, right? And NVIDIA is the biggest name in this ETF. Its holdings are 20%. So the other chips are doing good. If NVIDIA starts to play, this will start to play, actually get that breakout and begin to move back up. Could see the buoy in the market from that, but that'll take money away from software again, likely. I doubt we get software and chips both going in the same time. It's possible. Not a lot to play on today if you're waiting on FOMC. Bitcoin names, Riot, Mara, Hut, Hive, Coin, MSTR. Some pot stocks and airlines. You know, it says they're up, but they're not looking really good. Still, it could turn around in the pre-market, so it's worth keeping your eye on those. Could get a day trade out of any of those groups. The Bitcoin group, solar, pot stocks, airlines. It's better than nothing, I guess. Otherwise, you're stuck waiting. To see if we're going to get some sort of inside day breakout on SPY, the ES NQ. That's what I got for you guys. Watch the clock. Remember, at 9:15, we've got an odd number, odd time frame economic event today. So don't let it sneak up on you. 9:45, excuse me. No, I said it right. 9:15 Tuesday. So don't let that one sneak up on you. Be careful, be safe. I'll see y'all tomorrow.